Hi subscribers and welcome back to the channel. Today we're going to be talking about defined benefit pension transfers and insistent clients, FCA guidance for firms and insistent clients. Okay, so to kick off, I'm going to start with a straight definition of what is an insistent client. So if you follow my screen here from the FCA, we're going to go to definition. Who is an insistent client? In this section, a client should be considered an insistent client where 1. The firm has given the client a personal recommendation. 2. The client decides to enter into a transaction which is different from that recommended by the firm in the personal recommendation. And 3. The client wishes the firm to facilitate that transaction. Okay, so what's really important to note here and why we're talking about defined benefit pension transfers. So, as you will probably know from doing your homework and reading so far, the FCA has said over the course of the years, particularly a couple of years ago, they were very concerned about the high level of people who are being positively advised to transfer out of their defined benefit pension scheme. Now, the reasons for this are obvious. A defined benefit pension scheme is gold plated. It's extremely valuable to you. You have indexation at a certain level, normally in line with inflation, RPI, CPI, whatever the benefits of your scheme are. You also have an annual pension which will be passed to your spouse, or potentially even some of your children, depending upon their age, albeit at a 50% rate of that annual pension compared to something such as a SIP, whereby you may get 100% able to pass on to your spouse or whoever you may wish to pass it on to. So the FCA started coming down very hard on pension transfer specialists, trying to get them to rethink about how they are doing these types of transfers. And as we all know, the FCA's guidance is all financial advisors and pension transfer specialists must start from the standing point that they must assume a defined benefit pension transfer is not in a client's best interest, and that the advice most certainly would be to retain those assets. In certain instances, whether it be ill health, serious ill health, possibly even debt can be a reason why someone may need to transfer out, or other specific reasons, a client may be advised to complete a positive transfer. So a lot of clients are reaching the end of a very expensive advice process only to be told you are to retain your safeguarded benefits. That's the official advice. Now, in my opinion, that's an extremely valuable outcome for a client because they spent a very large amount of time doing the homework and research. They're going to keep that defined benefit scheme for 5, 10, 15, 20, 30 years, whatever it might be. Whatever fees and money they've paid for that advice is very valuable. Most clients don't see it like that though, and they think, well, hang on a minute. If I paid a percentage fee or a setup fee or a cost for the DB pension transfer report, I want to be able to proceed with my advice. So what a lot of clients are looking for is they're happy to pay the fees, but they also kind of decide that they want to move ahead with the transfer. Now, here at Cameron James, at the time of recording in 2023, we are able to accept clients who wish to proceed against the advice inside the DB report. Now, for how long this remains is yet to be seen. This is an area which is quite stringent in terms of compliance and advice. Here at Cameron James, we're extremely careful with this though. We don't allow all clients working with us. The advice report is no. We don't allow everyone to move ahead. We review this carefully with people on a case-by-case basis. There's also a slight definition which is important here, that when you're receiving the personal recommendation, so here at Cameron James, we always use a regulated and authorized pension transfer specialist for all of our DB reports for our clients. This helps to create a Chinese wall system where effectively, even though I am a qualified pension transfer specialist, we ensure that the pension transfer specialist who's authorized and regulated completes the report, and we follow up with this process if the client wishes to continue after that point. So slight definition for you there. Guys, as always, please like and subscribe to the channel to let YouTube know that we're helping you guys and to show us to more people. So what's really important with insistent clients is that it's a very, very stringent process. So again, I'm going to go back to my screen to give you a bit of information. So information to be communicated to an insistent client. Where a firm proceeds to execute a transaction for an insistent client which is not in accordance with the personal recommendation given by the firm should communicate to the insistent client in a clear, fair and not misleading, and have regard to the information needs of the insistent client so that the client is able to understand the information set out in number 2. Number 2, the information which the firm should communicate to the insistent client is that the firm has not recommended the transaction and that it will not be in accordance with the firm's personal recommendations. B, that the reasons why the transaction will not be in accordance with the firm's personal recommendations. C, the risk of the transaction proposed by the insistent client. And finally, D, the reasons why the firm did not recommend that the transaction to the client. So it's really important here, and the key words here are clear, fair, and not misleading. This is really important. When you're dealing with someone such as an insistent client, you have to be extremely clear with them to understand they are going against the financial advice. Now, anybody who's going against the official financial advice should probably be asking themselves, saying, well, hang on a minute, a professional is telling me not to do this. Now, the FCA, in fairness to them, are not saying to people, you are not allowed to. They're saying you must take authorized and regulated financial advice first. They are still allowing people to make their own decision as to whether or not they wish to proceed with that business. Now, the number of companies in the UK that accept insistent clients is extremely small because a lot of financial advisory firms just don't want to get involved in it, particularly if DB pension transfer work is not their biggest thing. The third point we can look at here is an acknowledgement from the insistent client. The firm should obtain from the insistent client an acknowledgement that the transaction is not in accordance with the firm's personal recommendation and that the transaction is being carried out at the request of the client. Where possible, the acknowledgement should be in the client's own words. So here at Cameron James, in an instance where we were to facilitate on a case-by-case basis and move ahead with an insistent client, we always require them from a compliance perspective to write in their own words a handwritten letter of what they understand happened, why they wish to move ahead against the advice, etc. Now, this is useful for a number of reasons. One, it's not just the client typing something out on email, or the financial advisor could have got them to type that out, or whatever it might be. A client's own words really gets them to sit and think in a blank piece of paper and a pen. Am I really certain of what I'm doing here? And I'm going to put it in my own words. This is also good from a compliance perspective because it's a very clear document and file which can be kept on record for themselves, the pension, the PTS as well. So it's quite a difficult area working with insistent clients. And here at Cameron James, whilst we're not able to say whether someone wants to transfer or not until they've been through the authorized DB advice process, it can be very apparent to us, even at an early stage. If we look at a client on day one and when they're talking to us, say, I have XYZ pension, I want to transfer it for XYZ reasons, instantaneously we will have alarm bells saying, wow, this really looks like, considering that the majority of people shouldn't move their DB schemes, this person with what we would deem to be pretty poor transfer rationale is almost a certain case that they're going to end up being advice not to proceed, which means they would have to go down an insistent client route. So generally speaking, we wouldn't even propose those type of clients to the pension transfer specialist from the beginning unless the client had certain aspects they wanted to talk about. So for example, ill health or serious ill health, or just maybe plans. So for example, they may already have a large amount of money outside the DB pension scheme. From the age of 60 or 65, maybe they don't want an annual income from their pension scheme because they're only going to increase their tax bracket in the UK. Maybe they're lucky enough that they want to transfer to a SIP, keep the money invested for 20, 30 years and pass it on to their beneficiaries, free from inheritance tax in the United Kingdom. So these are all different areas. There's many reasons why someone might want to proceed, but it's not a simple case of I want to move ahead and you can move ahead. Here at Cameron James, it's always on a case-by-case basis, and we're extremely stringent in the way that we follow the FCA guidance. We actually have a number of steps over and above what's written inside the guidance, so it's very clear for clients what they're doing, with numerous opportunities for them to come back and say, actually, no, I do want to keep my safeguarded assets, which we have to remember, for the majority of people, maintaining your DB safeguarded assets is the best financial planning advice that you can do. Guys, I hope this has been useful. Please let me know in the comment section below if you've been through one of these types of processes before, if you're currently going through a process. You can also book in via my Calendly link to have a conversation with myself or one of our senior financial advisors. Take care with UK pension assets and speak soon.